If you are even just slightly unsure about what a 401k is, a Roth IRA, what an annuity is, how life insurance works, what it is, investing, and just overall different tools that you can use to boost your finance legacy down the road. This is going to be one of those conversations that's very useful if you use it. I've made it a big part of my journey in life to explain to people what these things are because I didn't get the opportunity to learn about these things honestly until recently. And by opportunity, I don't mean that these things were not accessible to me. I just didn't realize how much I needed to know about these things. Last year, I started learning about finances, just money, investing, different protection tools that you can use to make sure that you basically never hit zero. And if something really bad happens, you have money to deal with it. And so learning that there's actually a way to take care of issues like that has been kind of a game changer for me because it kind of unlocked another passion that I didn't know that I had. So a 401k is a type of an account that you can open with the place that you work for. And they're going to take a percentage of your checks and they'll match and invest the rest. And with this money that they invest and they get dividends on, you'll get some of that and that will go into your 401k, right? So that's great for retirement. That's great. You probably have some sort of health insurance that has a really high deductible, maybe like $1,000 or $3,000 or something like that. Health insurance is obviously important. Health savings account is great. There's different things that you can use that are actually more beneficial than other things. So, and that's kind of what I wanted to talk about because I'm 23, and last year I started learning about finances, just money, investing, different protection tools that you can use to make sure that you basically never hit zero. And if something really bad happens, you have money to deal with it. We want to make the things that we want to do as easy as possible, as automated as possible, because if we do that, we're more likely to actually follow through with what we want to do. So this works in every area. That's something that I'm super excited about money because it's in every different, it can be used, the same principles that you use to build your wealth can be used in different areas of your life and vice versa. Your fitness stuff, there are ideals in fitness that can be transferred directly into finance. The discipline aspect, saying, I'm not going to hit snooze and going to the gym can be compared to saying, no, I'm not going to spend my money on this because it's not really a good decision. It's not going to, it doesn't move the needle towards what I want to be focusing on. And if you're wanting to focus on finances, then it's going to be really nice to just be able to focus on finances and just say no to everything else that is getting in your way. So that's kind of why I want to dive into finances because I think once people realize that they can actually build wealth, and by the time they're 40, 50, sometimes younger, sometimes older, they can be in a place where they're not stressing out financially. They don't have to work a 40-hour job if they don't want to. They can figure out different career pathways, whether that be teaching somebody how to do affiliate marketing, maybe teaching somebody how to become a life insurance agent. You could really hone in on your esthetician's license and open up your own place and really, there are a number of different business ideas that you could pursue instead of working 40 hours a week for somebody that did pursue their dream and their passion and their work, and now you're working under them. You can do the same thing, is basically what I'm trying to tell you. It doesn't matter where you are, it just matters that you start and you start focusing on ways that you can actually move towards your goal. And I want to start with finance, and that's why. Start acting right away because that is the best thing that you can do. It's just start doing what you're going to do, but what you've been wanting to do right away. And this is in finance, this is important, especially when you're young, because you're never going to be as young as you are now. And the sooner you start something, the longer it has to compound over time, whether it's a good thing or a bad thing. It compounds into that good thing or the bad thing. And in finance's case, we want our money to compound into more money. We don't want to slowly go downhill. And whenever we don't act on investing and learning and educating ourselves now, that's negative. That's compounding non-action in a negative way, opposed to learning about it and taking action towards it. We're compounding our education, but by compounding our education over time, we are also compounding the amount of growth that we are able to accumulate financially and with our wealth and with our legacy. And that is truly a beautiful thing that is overlooked because money actually gives you freedom to do a lot of things, like not have to work that job that you've been working for and barely been able to make it by on that job. Maybe you're also in school for something. Maybe you realize that maybe that isn't going to be what you want to do all the time. So you want to have some type of backup plan. And investing in protection is a way to do that. And because of that, that's really exciting. We want it to compound in that way of where we're learning instead of compounding negatively. Because that can happen. That can absolutely happen. And every day that you don't take time to learn about these things is a day that it's compounding downward. And by pushing this out there, I decrease the chances of people continuing to go down, even if it's by a little bit. And that is more than enough for me. I love that, honestly. And I'm very proud and very blessed to be able to do what I do and to have the drive to continue to learn and share what I've learned with people. Annuities. So basically, an annuity, all of these are kind of like putting your money back into a place automatically without you even really thinking about it. It's automatically drafting into these savings and investment and protection vehicles, these tools. And while it's in there, it's not just doing nothing. Depending on which one it is, the life insurance should be mainly focusing on protection of debt that comes with your debt onto your family, and also if you get sick or injured. That's what life insurance, those are the stars of life insurance. There's also another component of life insurance that should not be emphasized as much as it is, I believe. It can be highly beneficial for the right person, but also it's not the main purpose of life insurance. It's just like a perk. It's like you got a pizza and you've got the death benefits sprinkled on the pizza, and then you have the living benefits sprinkled all over the pizza, and then you've also got cash value investment portion of life insurance sprinkled on the pizza. It's just there, it's just there in certain policies. And it's not meant to, life insurance is not meant to replace investing, true investing, because life insurance is guaranteed protection. Like, if you have a stock and you're 30 years old and you've invested in this stock, and say you've got life insurance as well, and it has living benefits, you've been investing in the stock, but you're not as rich as you're going to be in another 20 years of investing in the stock. You've only been investing in it for like 2 years. And you've got this life insurance policy. 2 years after 2 years of having this investment policy, you get sick or injured. Maybe you get in a car accident and you're temporarily paralyzed. You can pull from your death benefit, and you have that immediately. You have that right there. What you couldn't do is pull from your investment vehicle because you just started and you've got basically nothing in there, opposed to the life insurance policy that you do have right now. And you can surrender it later. But the idea is to always have that protection. It would be ideal to always have that protection. Like putting your money back into a place automatically without you even really thinking about it. It's automatically drafting into these savings and investment and in protection vehicles, these tools. And while it's in there, it's not just doing nothing. Depending on which one it is, the life insurance should be mainly focusing on protection of debt that comes with your debt onto your family, and also if you get sick or injured. That's what life insurance, those are the stars of life insurance. There's also another component of life insurance that should not be emphasized as much as it is, I believe. It can be highly beneficial for the right person, but also it's not the main purpose of life insurance. It's just like a perk. It's like you got a pizza and you've got the death benefits sprinkled on the pizza, and then you have the living benefits sprinkled all over the pizza, and then you've also got cash value investment portion of life insurance sprinkled on the pizza. It's just there, it's just there in certain policies. And it's not meant to, life insurance is not meant to replace investing. Now, let me give you a scenario. Say you've invested in stocks. You started when you were my age, you're 23, and you start investing in these stocks, and you got the S&P 500, and you're like 50 now. Let's say you are 53 years old. So, 30 years down the line. You have been investing in this stock for that long. Maybe you've got another stock. Maybe you've invested in like 3 really good stocks and you've built up a lot of money from those stocks. And you can pull them out. You can sell your stock and get the money for that. And then you have that money either in your hand or in your bank account. or in a check. Um, because you're 53 now and you've been investing for so long. You can do that. But you also have a life insurance policy. And it's like, do I even still want this life insurance policy, or do I want to just surrender it and get my money and stop paying for this now? You can do that. You can absolutely do that. You can surrender it. You're not going to get everything back. But the point of that was not to get everything that you put into it back. The point of it was to protect. Remember, the purpose is to protect, not to drain your money, not to scam you, to protect. So that money that you're going to surrender, you're going to get a certain amount of money, depending. I don't know exactly. I do need to research how much money you get based on how much you put in or what the death benefit was in a cash surrender. You can surrender your policy and you can get money from doing that. And then you can take that money that you would have spent on the life insurance policy and start investing it in other areas, maybe. And thank goodness nothing happened to you, because you lived 30 years and you did not get a terminal illness. You've been really healthy. You didn't become paralyzed, or you didn't have a critical illness or injury of some sort. You made it. Wow, that's awesome. You spent that much time and you didn't die. That's great. But you're only 53. You could still die, and you could make some poor decisions, or something could happen with your stocks. And by the time you're 70, you could have lost all those stocks from whatever decision you might have made. Say that happens. And then you are like 70 years old now, and you don't have a life insurance policy because you decided to cancel that because you were doing such a good job with investing that you didn't see a point in having your life insurance policy, because you're investing so much that it would basically replace the death benefit. Except for when you're investing, what is its purpose? It's to grow, yes, but it doesn't grow risk free. It's not guaranteed growth. Okay, it's not guaranteed going to shoot up a certain amount. It goes up and it goes down and it goes up and it goes down. It's just how it works. So a good chunk of money that you had could go down quite a bit below what you were going to get if you passed away, you know? And so if you have this death benefit when you actually are 70 and you do finally get sick and something tragic happens, because the likelihood of that is very, very possible. If you look at stats, I'm not going to go into that in this video. If you do look into it, you will see some stuff that maybe will make you think about some things. But anyways, you get sick. You've got all this money in your living benefits that you can use to cover expenses. You won't have to work. You won't have to go back to work. You don't have to jeopardize your stocks. You can keep growing your stocks, because when you pull out of your stocks, it decreases the value, and it stops growing the way that it used to. Okay? It takes a lot longer for it to get there now that you've pulled out some stocks. So you can just utilize the living benefits. And depending on how bad your situation is, you might not even use all of your living benefits. And then you can take that money that you didn't use and you can actually invest it further. Or you can do whatever you want to with it. It's your money. That's living benefits. You don't have to pay living benefits back. It's just something that's built into certain life insurance policies. And people need to know that.